Hi and welcome to another video from TCM Education. In this series we call it the Green Day series. We're finally encountering for the first time an important stock. This is Google. Now you'll see in a minute that it doesn't fit 100% of our criteria, but it's important from time to time, even though we don't encounter Google or Nvidia or Microsoft or Facebook or any other of the big seven, to take a look and see their potential, the amazing liquidity, sometimes amazing price action, and those stocks should be always on our watch list, no matter what. So again, going back to our losers list, and again the criteria is at least 5 million shares traded, and the intraday range is above 5%. And the stock barely fits one of these criteria. Let's take a look at the GOOGL, and you can see that the intraday range is 5%, 0.12. So it's above our threshold, but it doesn't close down 5%. It closed down 3.85. Okay, so we'll have to close. Take it or leave it. I wanted to show you how this type of a stock trades and how you take advantage of its liquidity using our specific criteria for entering a trade. And obviously market cap, it doesn't matter. It's 2 trillion. Everybody knows that it's always has been in the last year, actually the last 2 years, more than 1 trillion. The volume, intraday volume, is unbelievable, 75 million shares, and yeah, it's a legit day trading stock, almost day in and day out, if there is enough range. Now the Nasdaq closed down 0.5% on Friday, and Google closed down nearly 4%. So it was way weaker than the market for various reasons. But we don't know about the reason. We don't care. We care about the intraday chart. So let's go and look at the intraday chart and see what happened in Google. GOOGL. You can also look, if you feel comfortable with GOOG. The difference is totally marginal. Okay, so this is the chart. As you can see, it opened up without any gap. So up front at the open, you don't see any reason to look at Google because it's not stronger than the market or weaker than the market, so why would you bother? Then the stock starts to move lower and breaks a couple of levels, and I think by now, by the time it reaches 170, it's down 2%, maybe 3%. It starts to point, if you're looking at a list of the big names versus the market, it starts to show up, meaning it's way weaker than the rest of the SPY or Nasdaq leadership, and of course of the indexes. Now, can you figure out a trade and short it at 171? Hold on a second. Again, if you have the right watch list, maybe you can start with a trade at even at 172, okay, if you have the right watch list. I assume that you don't have the right watch list, and you start the trade either at 170 or later, okay? Let me add the VWAP and see how we can react with the VWAP on the chart, if it's going to help us. Not likely. Okay, so I'm going to take into account that we're not entering the trade at either 172 or 171, not even at 170. So we're seeing the stock here at 169, at this level. And now you have to decide if you take the trade short and what is the risk. Okay, obviously, if you're looking for a trade short at 169, bucking the trend here, obviously you have the stop loss. Let me see the level. Hold on a second. At 169.56. So that's 1/3 of 1%. In terms of risk, a short at 169 carries the risk of 50 cents, which is way below our threshold of $1.70, which is 1% here. So that's a no-brainer to take this trade if you believe you want to short Google. This is a clear, great entry point, 169. Okay, and if you actually enter it at 169 early, you have a 60. Sorry, let's call it 60 cents, 1/3 of 1% of risk. If you enter it late in the day, you have the risk of 45 cents or 30 cents, which is dismal. No matter how you look at it, assuming you miss on this, and this is, I think, a reasonable assumption that you're not going to be able to short it under this big move lower the first time, because you're not watching, or most of us are not watching Google specifically. Most of us are looking at the gainers losers list, and this move lower here is out of reach. Okay, if it does happen, okay, that's fine. If it doesn't happen and you observe the stock moving sideways, and then you're thinking, okay, how can I short it, and where should I short it? And I'm looking at this 169. Let me pinpoint actually the stop losses here. And here. Hold on a second, guys. Okay, so those are the stop losses. Either 169.56, I will round things up to 169.60, or 169, or 169.32. I'll round things up to 169.35. So 35 cents stop loss on a mega mover, $169 stock. I mean, I hope you understand that this is in percentage wise, and we're talking about percentages, is 1/4 of 1%, even less. So this is a perfect trade if you're looking at short 169. Okay, no matter where you take it after 12 noon, basically. That's I think the only trade that I see in Google pretty much all day. Again, ignoring this drop from 173 to 169, which is a $3 to $4 drop, but not really feasible to trade, because we had a zero outlook on Google in terms of gap up or gap down as a focus point early in the day. So again, and guys, if you observe those patterns that we're talking about, you see that the opportunity, or good opportunities, are very, very hard to come by if you're not really focusing 100% of one stock, and it's impossible. What are the chances that you're focusing on Google early in the morning? I don't want to say zero, but close to zero. So you need to have a specific watch list of big names. I posted it. I'm posting it from time to time. Again, even if you have the watch list, you most likely are looking elsewhere, because there's so much action going around. You cannot focus on Google. Now, if you do focus on Google, like I said before, you have a couple of good entries, all of them at round numbers. This is our discussion. Now, again, the view up is not in place, so that 169 entry, wherever you start the trade, the stop losses, this stop loss 169.50 or 30, let's call it 50, okay, just to round things up, is holding up, okay. So, and the stock is moving down from 169 to 166. So that's a $3 move on a 50-cent risk. That's 5 to 1, 6 to 1 in that ballpark. If you're using this 169.30, then it's a 10 to 1 risk reward. But let's not get greedy, okay? Because again, there are a couple of points here where you can enter. The timing is either one. I mean, the best trade in terms of timing is after 2 p.m. So in this case, you enter the trade late, and this is that's becoming the best trade. And it nearly closes at the lows of the day, but ricochets back almost $1 in the last 6 minutes. So this is something that happens always, where you either give up on a lot of profits or the stock adds to your profits. It can go both ways. Shame on Google for not signaling anything interesting before this very, very fast drop. Now, joining on the way down is obviously very risky, because you don't have time to assess the risk. The risk grows substantially on the leg down, but in this case, if you join and you are successful, it doesn't fit the strategy that we are using here for trades. The strategy that we're using is simple, but it requires no more than 1% of risk. So it doesn't matter how big the position is in Google. You can take any. I mean, this is a stock where basically the number of shares or money quantity that you can enter any trade at any time is limitless. Basically, I mean, you can enter $500,000 short, or in our case, let's call it $50,000, which is how many shares is here? 300 shares basically. Yeah, maybe 300 shares. Okay, so again, the concept is not how many shares, but the concept is percentage points. So it drops here $3. That's let's call it 2%. The risk is a quarter or a third of 1%. Again, 10 to 1. It doesn't matter if it is shares or percentage-wise. The risk reward is always the same. And again, just for the matter of transparency, we're using this $20,000 position, but I mean it's something that can be transposed to $5,000, to $50,000. It doesn't matter. It's a personal decision, and no one cares in Google or in the market if you're shorting Google by $50,000 or by $150,000 or by $5,000, because the liquidity is absolutely perfect and the turnover is unlimited. So again, focusing on the big names is super important. Most of the time they will trade, most of the time, but not all of the time, they will trade exactly like the S&P or the Nasdaq, but when they trade outside of the scope, they really stand out. Okay, so if the market is moving 0.5% up and down, and all the big 7 are moving in range, nobody cares. But in this case, Friday, it was clearly that Google was way weaker than the Nasdaq, which like I said before, closed down 0.5%, and the S&P closed down 0.22, and Google closed down, although it made its move late in the day, nearly 4%. Basically, it was more than 4% because it cleaned up $1 in the last 2 minutes. Okay, guys, I hope it was illuminating enough. If you have any comments, please do, and we'll see you in our next video. Please do share this video with your fellow day traders. Thank you.